guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is real estate investment expert Dave Codrea. Now, Dave is a co-founder of Greenleaf Capital, an Atlanta-based real estate investment firm. And since the inception as a two-man venture, Greenleaf has grown its geographic footprint to encompass several states in the southeastern U.S. with a growing portfolio that currently includes apartments, mobile home parks, and various commercial properties. And so with that, guys, it's an honor to welcome Dave to the show. Dave, how you doing today, my friend?
I am doing great. Thanks for having me on, Kevin. I love listening to this stuff and talking about building cash flow. That's
it.
kind of the goal.
Cash flow is the game. I love cash flow. I love cash flow. As you can see, the book's behind me right here, the one I just wrote called Cash Flow Investor. We're all about cash flow. So excited to talk to you. I know we were having some dialogue there before we hit the record button, just talking a little bit about your business in the background. And so what I'd love for you to do, Dave, there's a great deal to your story. You've been at this quite a number of years. And so, I just really breezed through that very short bio. And so there's definitely more to be had there. So I'm going to pass it back to you and ask that you fill in the blanks and tell us a little more about yourself and, how you found your way into this world of real estate.
Yeah, I've been fascinated, one, by real estate. I love the physical attributes of just looking at buildings and seeing what's going on in the nuts and bolts of it. So that's something that's just been generally interesting to me my whole life. And I still like it to this day. And the other benefit is just cash flow. I was always, I think you're trying to be like, how can I improve my cash flow? How can I earn more money? Mm-hmm. And for me, real estate was the least complicated path that I could find to do that. So I started pretty early at a high school looking at this kind of investment opportunities. And then I started Greenleaf about 15 years ago. And we've been buying mostly residential, which was a long time of apartments and mobile homes. And then have also branched in over the past 5 years into different parts of the commercial world, which includes flex industrial, and we've done some retail, like single tenant places, and we've done a lot of medical space as well. So we've got a couple different asset classes now, but it's all focused between Atlanta and Raleigh, North Carolina. So if you drive between the two, that's our home. That's where we want to be, and we don't really venture too far outside of that.
No, I appreciate that. And where have you found, let's talk about like the last 6 to 12 months. Again, you gave a number of, there's a couple different asset classes there, and all are, I guess, different stages of kind of the market cycle. They all kind of bob and weave in different ways as we go through these different economic changes. And so where have you found the most opportunity in this last 6 to 12 months? Which asset class?
Right now, I mean, flex has been very positive. We've been finding good deals in office, which I know is like office people are like, oh man, we're running from the hills from office space. But in certain parts, it's been doing very well. And then operationally, we operate everything we buy as well. So operations is a whole nother segment of like, we've done very well in the residential side with just operating over the past 2 years. So we haven't bought any new assets recently on the residential side, but we have done a lot on the operational improvement and physical CapEx improvements there to improve our revenues, improve our cash flow. And that's gone very well too. So really those three, it's like reinvesting into residential has been good. And then flex has also been a very good hotspot for us.
Got it. Yeah, let's talk about offices real quick. So, everyone's running for the hills. Maybe speaking some more specifics to, the office that's performing well for you. Is this suburban office? Is this, CBD? What size spaces? I know that you can never paint a broad stroke against these types of comments or this commentary of like office is bad. That is just not the case across the board. I mean, one could argue that like multifamily, it's had its heyday for the past 10 years, and multifamily is phenomenal. But I bet you there's parts of this country where multifamily rental housing, especially in certain markets or in certain neighborhoods of a particular not so great market, it probably sucks, right? So you just can't paint a broad brush stroke at all. And so tell me about office in your world. What has been working?
Yeah, I mean, I think it's important to be a local investor, right? I think you've got to know the markets that you're operating in, and how you're going to place your money. And if you have investors, you're kind of the steward of their capital. So you got to make sure you make good decisions with that. But office for us, you look at the office market as a whole, and there's the giant towers downtown that are, 50 stories tall. And that's another planet of real estate. That's, I don't know anyone that's buying those giant towers. We're certainly not interested in buying those giant towers, but we are buying office buildings that have smaller suites, 5,000 square foot suites, and it's all suburban. It's single story, plenty of parking, close to where people live. Most of our office space is not occupied 9 to 5 Monday through Friday. It's, they've got a few offices, some conference room space, and they use it because it's close to their house and it's easy to get to for employees there.
Okay.
And that part's done really well. In our rental rates, you're talking about rental rates that are like $14 or $15 versus $50 to $75 in central business districts. So we avoid those. We're simply investing in office space that's close to where people are. It's easy to get to, and it doesn't have a lot of hurdles to get into it.
Got it. Got it. Do you see some opportunity coming down the pike in the markets that you invest with office properties that might have had some struggles during COVID? Or I know that suburban office did quite well, again, generally speaking, and in the markets that we're talking about where you're investing, which is, in the Carolinas and Atlanta, and, they fared pretty well, especially suburban office. Now, downtown CBD, not so much, but that's not what we're talking about here.
Yeah. I mean, certainly something's going to happen with those downtown areas, but that's not going to be me and in our business. We're probably not going to lead that. Like, hey, what do you go do with 400,000 square feet in one of these big office buildings? But there's definitely opportunities in the sense that people want services that are closer to where they live.
Mm-hmm.
I think that's even the rise of all the food delivery. People want convenience. They don't want to have to be going too far. And ultimately, I think it's a strategy of investing where you're looking at, you don't want to be swimming upriver against stuff. And I think trying to get someone to commute an hour to go to an office is going to be hard. Yeah. I don't really know anyone that's like, man, I miss my hour commute. But 10 minutes, sure. People are okay with that. So I think any opportunity where you can find that stuff within proximity to a residential area, I think is good. And opportunities we're seeing, some of the office stuff is just being torn down, or some older buildings are being torn down in the markets I operate in, and they're building more. It's not super affordable, but they are building townhome and apartment communities that if you have service buildings around those, they're in a good position to succeed long-term, in my view.
You've mentioned that you've really put an emphasis in the last couple of years on the operational side of your business, really to, with a focus on driving revenues, driving cash flow. Talk to me about some of the strategic ways or things that you've implemented over the last 2 years that have really helped you guys grow that side of your business.
Yeah, in the most recent years, it's all been technology driven. Mm-hmm. Technology has really kind of helped reshape real estate operations in a hugely beneficial way. I mean, 8 years ago, just doing a background check or doing that kind of stuff was piecemealing different systems together, or like, how are you even going to go find some of this information? It was really wonky and it wasn't a clear path. And now there's excellent technology solutions to rapidly get credit checks and background checks and approve things. And I mean, that's in almost all commercial management software right now. That stuff's already just built in and makes the operation smoother. So we look at that from being on the operating side. We're able to increase our revenues per person. That's a metric we're looking at all the time to see what can we add from a scalability function to improve how well our people work. And we're always looking for what manual process can we remove. Mm-hmm. So even today, I had a meeting today, and it is as kind of mundane as it sounds, is we're going through our invoice process across the organization of saying, when vendors submit an invoice, how does it get into our system? Do the right people see it? And how can we reduce the steps and reduce the touch points and clicks to make that as efficient as possible? Mm-hmm. It saves everyone time, makes us more profitable. So we're always looking at every angle like that to say, what can we do to improve how we function as an operator?
Just curious to know what platform you guys use on the property management side of your business. And I'm more specifically asking that because just you've got different types of assets. Residential kind of falls into one bucket, whether it be mobile home parks or apartments, but then you throw in medical office and flex space and some of those other variances. Is there one all-encompassing software you use?
No, because the demands of the resident that's at a spot versus a commercial tenant, they're very different, and kind of that customer service approach you're taking, you're trying to do a good job on both, but it's very different on the residential side. So We use Entrata on the residential side, and we use that both for apartments and mobile homes, and it works very well. Even with, mobile homes have unique aspects of, is that a lot rent? Is it are they renting the home as well as renting the lot? There's some dynamics in there that have to be built into the software.
Yeah.
And on the commercial side, we use Yardi Breeze, so that's
Mhm.
been a good platform, and it's very commercial driven. So that works well. And we have the investment management side as well for the syndication component, and we use Juniper Square for that. So really
Got it.
pushing those three systems, and
Yep.
they've helped us scale a lot. I mean, these are readily available. Almost anyone can sign up for them.
Mhm.
So it's not, but there is a learning curve to using it effectively.
Yeah, I agree. I agree with you. I appreciate you sharing that. I know you guys aren't in acquisition mode. At least you haven't been for the last 2 years. I shouldn't say that because I'm sure if a deal came along, you'd figure out how to buy it, right? And so, but you really been putting the emphasis
Yeah.
on just really shoring up the operations side. But with all that being said, this kind of plays into both, current portfolio as well as new opportunities that come your way. Just navigating the volatility of the debt markets. I mean, what's the internal chatter sound like within your respective business, both with current debt that you guys have in the
Yeah.
books, maybe that might be coming up for but it might be coming to term here soon. Future opportunities. Just what's the chatter sound like?
Yeah.
I'd love to know the internal
Yeah.
conversation.
I would say internally, like maybe 2015, we were like, man, interest rates have to go up. That was wrong, obviously.
I know. I think
So
yeah,
I was
we
like,
had a lot
how
of those
can they keep
conversations
going
too.
down? And then I think it was like 2018, 19, it's like, maybe they'll be negative. Who knows? But no, because of that, we've always focused on long-term debt. So the majority of our debt, we don't have anything that's like floating rate. So we have all fixed rate debt. We have amortizing loans. We're paying principal. And the majority of our debt, our average debt is over 5 years out that we have right now.
Mm-hmm.
So we've got a pretty long-term view on debt, and our rates are in the threes for our debt, and we don't use a lot overall. We're under like 50% loan to value on debt.
Yeah.
So while it's there, we try and take a pretty conservative approach to it. But deals coming up, I mean, we're doing a deal that we close in about a week and a half. We're getting a 5.8% rate, which is much higher than anything's been in the past. But I feel like we're paying less for the deal because of that.
Right.
We're getting a little bit of a discount. We're still hitting our cash flows and our preferred returns that we want to see out of a deal. We're still able to hit that with 5.8%, and we have a big deal that we're closing as well that we're doing debt in 7%.
Mm-hmm.
But we're using less debt, more equity, and we're still able to hit cash flow returns because of that. So
I'd love
but
to.
it's definitely all over the place.
You haven't closed these yet, so you don't have to give like locations or name of the asset or anything like that. But I'd love to get an dissect it a little bit. Maybe not a full case study because you don't own it yet, but just maybe compare what these deals look like today and the opportunity at hand, and maybe what it would have been a year ago, right? Because again, things have adjusted. In some asset class, some markets they haven't so much. Like larger institutional quality multifamily. It might have adjusted a slight bit, but definitely not at the same speed as rates have changed. And so would love to get a sense of, maybe what type of assets these are, and then what has that adjustment look like on the, from the cap rate to interest rate spread a year ago to what it might look like today.
Yeah, I would say, I mean, right now we're buying flex industrial assets. Those are the two deals that I got coming up. But even about a year ago, we were seeing the highest spread to cap rate to debt rates that we had seen in a long time. We were getting spreads that were in the 4.5% to 5% range.
Wow.
Which was great. So and we were trying to get as much as we could at that point. And that's certainly come down now, but we're still finding deals that we're buying in this flex space that we're buying at like above 8 caps. So if our debt's, 5.8, it's like, that's certainly a lot tighter than it was a year ago, but then we're using a lot less debt as well.
Yeah. Yeah.
But
and
a lot of the,
I was going to ask just to define flex space. Are we talking, industrial property, industrial buildings, but ultimately, have individual, warehouses, small warehouses, maybe 5,000 square feet with like a little like air conditioned 500 square foot office in the front of it, stuff like that. Okay.
Exactly. Yeah. A lot of the new stuff that's been built, and I'm sure anyone that's driving around and you see these massive warehouses with 1 million truck doors on it, and you're like, what is this thing? It's not that.
Yeah.
So we're looking for 5,000 square foot, 10,000 square foot, and maybe there's a couple of those in the building, but this is really like this is a local service provider business that's operating. They've got a few offices up front, but they need roll up doors. They can park some trucks inside at night,
Hmm.
that kind of stuff. But it's all smaller, and they're really not building any of that stuff. No one's out there building a 50,000 square foot, you know, a little bit of office flex space. That's not
Why
really.
not? I'm curious. Just, I mean, obviously it's in demand. I remember there was a massive heyday leading up to 2008. I remember flex space really just, at least we're down in the Tampa area, so Tampa, Orlando. I just remember
Yeah,
seeing that stuff built everywhere. Not so much traditional self storage, but the flex space that we're speaking of.
yeah,
And you know, why do you feel that if there's such a demand for it, that it's just no one's helping to meet that demand with new product?
yeah.
Because it's really not
Well,
that much more expensive to build than, self storage, right?
yeah, I mean, self storage has got a lot more individual walls on the inside, and it's got a lot of more like automation controls that are going into it now in those newer facilities.
Mm-hmm.
But also, I mean, if you can build a 50,000 square foot flex space, you can go build one of these 500,000 square foot warehouses. That's a 10x the size deal, and from a general contractor standpoint,
Yeah.
you're going to make a lot more money. So I think a lot of the talent and the uh, execution ability associated with these deals just went to build a giant Amazon facility for, $75 million. And you're going to make a lot more money simply because the deal's 10 times the size. And it's not necessarily more complicated to go do a 500,000 square foot building versus a 50,000 square foot building. So
Right.
that's why I think a lot of the skills went, they went further upstream with these bigger deals.
Yeah.
So it kind of left a void of building the smaller stuff out there.
Yeah. Good point. Good point. Back to the debt conversation. You guys you like to buy local, so like you've got a fairly small footprint in the grand scheme of things, with some great cities that are encompassed in that footprint. But, lending relationships, are they mostly with just a few select regional banks, national lenders, local
Yeah,
banks? What's
we've
kind of the
done,
go-to?
I mean, we've probably done like 130, 140 deals at this point. And we've used a national bank like 3 times.
Mm-hmm.
So we've used Wells Fargo for some, and it's worked great with them. But most of our relationships are with small local community banks. We use credit unions a good amount as well, because they're good local lenders. And also, I mean, we're trying to build long-term cash flow. So we buy a deal. Our expectation is that we are holding this thing. We're not looking at like what's our 4 or 5 year exit plan. It's like, no. Our plan is to buy this thing and
Mm-hmm.
operate it for cash flow as long as we can.
Yeah.
And that ties in well with smaller local banks. So that's really been the basis of our relationships with them. And we feel like we have, good access to those bankers and are able to get a clear picture of why a deal works or doesn't work.
Have you found any of the bank, your go-to banks? Have you found any of them kind of pulling back a little bit, given the banking debacle that's kind of played out over the last couple of
Yeah.
weeks?
Yeah, certainly. And some of it, they're being a smaller bank, you've got a lot of other pressures against you. But like if you wait a couple months, it sounds like the Fed's going to make the interest rate higher and you can earn more money on a loan. So why would you not just wait a few months and then do the loan later at a later point in time?
Yeah.
So there's certainly that point of it, but they still have, I mean, it's still relationship banking with a lot of those groups. And we have, 10+ year relationships and deposits where it certainly helps facilitate executing loans and keeping loans on the books. Because most of our loans, they hold. It's
Mhm.
not, a lot of multifamily can be syndicated, packaged through Fannie Mae and sold off, and the banks aren't holding those on their books. Whereas our banks are all holding, these loans are on their books. So they've
Yeah.
got their whole held to maturity aspect of our loan, and they want to know how it's performing.
Have you found flexibility with just given the long-term relationship with a lot of these local banks? The option, whereas maybe if I went to them out of the gate, they would never even consider a non-recourse loan. I mean, it would be full person guarantees. Have you found flexibility that once you've done a number of deals, you've proven yourself that non-recourse is an option if you so choose to go that route?
Yes, in the sense that, going through our business plan with them, once we hit basically cash flow metrics,
Mm-hmm.
because we're saying, hey, 2 years from now, 3 years from now, 5 years from now, I mean, we're starting out with personal guarantees because a lot of what we're doing is improving an asset. But as we hit certain debt coverage ratios, our personal guarantees decline. And as we pay off more of the debt, which is our plan, we're not trying to maximize debt by any means. So we're, as we hit those debt coverage ratios, we see declines in our personal guarantees, but they're not zero to start with.
Yeah.
So
Yeah. No, I appreciate that. And then as far as finding deals, again, you guys got your fingers in a couple different pots as far as the types of deals you're looking for. Your footprints, it's not small, it's not massive either, but it's a pretty decent
yeah.
size. We look at square mileage, right? And so, what is what have you found to be the best path to find opportunities at brokers? Do you guys do direct to owner type strategies? What works best for you?
Yeah. Yeah. We've always used the broker approach. Our typical deal size is $5 to $20 million. So you're kind of in this spot where if an individual owns that deal, it's a big deal, right? They want to make sure they're doing the right thing and when they're selling it. So they're normally going to have a broker. And if they don't have a broker, we're normally bringing a broker to the table just to help facilitate, like, hey, how do you convince them to actually sell the deal?
Yeah.
Right. So we're always using a broker. They may not be a fully blasted out package deal, but those are long-term relationships we've had with those brokers as well, knowing that the types of assets we're looking at, like, will we execute on a game plan if we come to an agreement? And that's really been our overall long-term strategy, is we will execute as we get into a deal.
Given that you guys love the flex space, have you done any? Have you gone down the road of any adaptive reuse projects? Maybe with like a big box or maybe a standalone retail that went dark or anything along those lines?
We've done some of those and they're super fun. They take forever and you always run into some giant hurdles with them,
Sure.
but they look really cool and they're a lot of fun. Are they the best investment? It's like,
it's more of a prideful thing, right? That we
probably not. Yeah, but they're fun. We did a high-end like wine store here in Atlanta that's like 25,000 square feet. And we converted a building that was built in the 40s. And it's really neat. It's in a great part of town. It's called Grapes and Grain here in Atlanta. And it's an awesome building, but it took a while. It took a while to get there. It wasn't an easy plan by any means. And we're friends with the group that operates that too. And even then they're like, guys, come on, you got to finish some of this stuff up here. We're working on it. But yeah, that stuff's really fun. I love doing that, but we only sprinkle those in.
Gotcha. What are you most excited about today? I mean, like your company, the business, like, your vision over the next couple of years, but what's really got you jacked up and get you guys out of bed in the morning time? And like, again, I guess, what does that look like in a couple of years in your business, growth wise and strategy wise? What have you?
I think areas of change are always the most exciting. I think people want to be in those. You obviously hope you're on the right side of whatever that change is. But right now with, and we don't have a ton of it, but like on the office side, I think it's a pretty interesting subject to follow overall. As we have a huge work from home. You have these boom towns from people that moved there during COVID. And it's like, does that keep going? What does that look like? And what does the future of some of these office situations look like, especially in the huge cities? I mean, I love going to New York City. I think it's great. I'm not sure what you do with some of that stuff that's up there. So I'm very interested in how that plays out. We're probably not going to be leading the charge on redoing any giant towers, but I'm certainly interested to see how it goes. And and then it does trickle down into the suburban, smaller office stuff, and then small business as a whole. I think that's a very interesting space right now. Is small businesses, whether they're using flex space or office space, or how it's been a rough ride over the past 2-3 years for small businesses. They've had a lot of challenges of. They just don't have the infrastructure that, the Fortune 500 companies have. So how do they adopt to like a rapidly changing economy? And how do they use space to their best, best ability? So and that's why I think flex space is a little bit, it literally can flex. It can move with what you need in your business. And those entrepreneurs, small business owners are normally pretty adaptable, and they figure it out, and they've got some wooden tables around and they make it work. So I think that stuff's interesting. So those two spots are really where I see the most change happening. And I think it's kind of the most exciting spot to be in right now.
Awesome. Dave, for those that want to learn more about you and your group, where's the best place to find you? Your website, social media?
Yeah, I
Where do
mean,
you hang out?
I'm not on a ton of social, but our website, greenleafmgmt.com, has kind of has all the deals we've done and put up there. So it's got kind of our history and what we're looking at up there. And then I'm on LinkedIn as well. So
Okay.
that's a good point to reach out. I got all my contact information up there. But yeah, we're super active between Atlanta and Raleigh. We got I-85. We drive up and down it and look for real estate opportunities.
Easy breezy. I like it.
Yeah.
Well, awesome, Dave. It's been a lot of fun having you. I appreciate you joining us here today and sharing all your valuable insights with the listeners here. It's been a blast.
Yeah, I enjoyed it. Thank you very much. It was fun.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.